So our next panel discussion will be focused on the state of fintech in MENA. As we've seen in our previous discussions and in the slides, fintech is really the biggest sector in MENA in both number and value of investments. And it's our pleasure to have with us a number of speakers on this session. We have Nadine Mezher, the co-founder of Sarwa, Oyetayo, the CEO and co-founder of Verto, Padmini Gupta, the CEO and co-founder of Rise, Yehia Badawy, the co-founder of Rain, and our moderator for the session will be Boustani, managing director at MEVP. Jad's been with MEVP for over 9 years, and before MEVP, he was at Truffle Capital in Paris and was in M&A at Bank Lazard Brothers before that. Jad, I welcome you and the panelists on stage for this session. Welcome.
Hello. Hello, everyone. I'm very excited to be moderating this panel because fintech is one of a subject that's very close to my heart. It's one of the hottest subjects that's currently in the MENA ecosystem. And I'm surrounded by the founders of some of the most promising startups in the fintech space in MENA and Africa. On the extreme left, I have Padmini Gupta. She's the founder of Mezher. Mezher is a social finance platform that allows people to share credits and their finance with people they care about and trust. The company has grown massively over the past few months. They now serve more than 700,000 users, and $200 million have been shared on the platform. Next to Padmini, we have Oyetayo. Ola is the founder and CEO of Verto. It's a leading cross-border payment platform focused on Africa, where it's a very large untapped market with more than 120 million SMEs. The company is gradually evolving into SME banking. So within the Q1 2022, they are increasing their pool of exotic currencies to 51, introducing a corporate credit card, and also launching a new API allowing large enterprise to perform and automate a cross-border transaction. Next to Ola, we have Yehia, co-founder of Rain. It's a crypto exchange platform in MENA, licensed by the Central Bank of Bahrain. Rain also grew massively over the past year by more than 10x. They have about 300 employees now, and also attracting several international investors, including Coinbase and others. Next to Yehia, we have Nadine. She's the founder of Sarwa. Sarwa is an investing and personal finance platform. It's a leading in the GCC, and they started with a passive robo-advisory and recently introduced an active trading platform allowing users to buy US stocks with zero fees. They also serve more than 50,000 customers to date. So the goal of this panel is mainly to identify the dynamics of the fintech market in our region, understand the growth drivers, and also the future of the market and ecosystem. So to start, Yehia, Ola, and Padmini, you together kind of launched within the same period. Can you tell us a bit more about the context behind your launch, and why now? Do you think you could have launched earlier, maybe a couple of years before? Padmini, would like Ola? Okay, please.
Hi. Thanks, Jad, and thanks for the very kind introduction. So I think we launched at the time we launched just due to the fact that there was a significant problem that we were solving for, specifically in Nigeria. So if everyone is aware of Nigeria, it's a bit like, I guess, Lebanon and Argentina, where the currency is always very unstable. And at the time we launched, businesses in the country were really struggling to make cross-border payments. So it was a perfect opportunity for us. So, I can't say whether if we launched earlier or later it would have been any different, but, we saw an opportunity and we sort of took it at the time. So I think perfect timing in terms of when we went to market. And it was really driven by requirements and needs of businesses in the country.
So we launched Share in January of 2021, about 10 months ago. And we launched it at a time where, people were going through crises. And actually, a lot of what we do now was inspired by that, right? Cash, in fact, became a 4-letter word. People couldn't spend it. People couldn't send it. And what we had then was, the acceleration of the cashless economies. We had an acceleration of e-commerce, and then you've got COVID, and that's actually created strong tailwinds for Share.
Yehia?
Sure. Hi, everyone. A pleasure to be here. If it were up to me, we would have launched in 2015. We spoke with regulators at that time about crypto, but you can imagine how those conversations went. And so in 2017 was when we met with the Central Bank of Bahrain and got into the sandbox. And really, during those couple of years, we spoke to several regulators in the region, and it was an uphill battle, just talking about crypto and how to regulate it and what's happening beyond the region here. Today, the conversation is quite different, and it's been an exciting journey thus far.
Thank you. Nadine, you also launched about 4 years ago. Back then, it was slightly before the Fintech boom. How did you see things change before this boom and afterward, and how did things become easier for you?
I think the ecosystem is definitely maturing. We were part of the first batch at DIFC Fintech Hive. We have Raja here with us. So it was quite a very interesting time because we saw that the regulators and the private and public sector started to work together to actually build the ecosystem. But it was really at the very starting point. That's from the stakeholder perspective. But even if you want to, Jad, look into the market itself, there is still a lot of education to be done. We're a tech company, so we're very data-driven, and when you look into the volume of searches at the time when it comes to anything, fintech, investing, the term robo-advisory here wasn't at all present. So there was practically no volume of searches, and then now, 4 years later, you see this exponential growth. So I would say it's a very different environment, but we're very, very excited about where it's heading.
Okay. And Nadine, what did you choose to start in MENA versus other markets? And I know you have personal also, it's due to personal, but more on the market side, like what's the most exciting?
It offers a lot of opportunities. Again, my co-founders, so Mark is here. Mark and Jad were living in Canada at the time, and they saw where basically the financial industry was at. And then every time they will come back here and ask friends and family, what do you do to invest your money? The answer was always saving accounts or real estate. So there was no way to actually build wealth if you didn't have wealth. And what we wanted to do is to give that opportunity to the mass, right? So to democratize investing, as we like to call it. Now, why did we choose here? For many reasons. I think, again, Mark heard about the accelerator at the Fintech Hive, so there was a lot of initiatives from the government here to support and grow the ecosystem. So I would say it was the ease of doing business and the market opportunity of a young population that has very high mobile adoption.
What about Rain?
In what sense?
Like why MENA?
Why
what
MENA?
was exciting
Sure.
about MENA?
So when we looked at the globe, there were licensed companies in the crypto space in North America, South America, Asia, Europe. There were a couple in South Africa, but there weren't really any in our region. However we choose to define that, North Africa, Levant, GCC. And that's where this idea came from, that this is going to happen. It's bound to happen at some point. We believe in the industry and in the technology, and that's why we chose this region.
Thank you. Ola, what about Africa? I know you mentioned the valuation of currencies. Can you please elaborate more on this point?
Yeah, sure, thanks. I think the beauty of for us, the beauty of sub-Saharan Africa, especially in the space that we're in, so, digital SME and payments, is there's actually no true, digital player in the space. I live in London, for example, and there's a lot of alternatives to banks. Fintech is, taking off quite well there. But when you think about sub-Saharan Africa, outside of banks, most businesses just don't have an alternative. So for us, it's a very compelling reason to use technology to solve for something that is obviously a big pain point in markets. And then also, just quite frankly, the demographics, right? So, you mentioned 120 million SMEs, very youthful population, extremely digital savvy, mobile penetration is super high, median age of about 19. So, it's very compelling demographics, and it's not really penetrated by, anyone yet. So for us, it's a, perfect storm for launching something that is tech-enabled, and that's the reason why, we're very bullish on the continent.
So MENA is actually one of the best places, especially the UAE is one of the best places you can actually launch a global social finance platform. So one of the reasons that we have users in more than 130 countries is because we're out of the UAE. If you think about it, right, every time one of our users shares money with their family back home, whether it's in India, Bangladesh, Philippines, that's great word of mouth network. You can't buy that.
Padmini, what about your customer base? So how hard was it to educate them? Are they embracing your products easily? Can you tell us a bit more about it?
I think anytime you're starting something, it's not easy. It's challenging, but we've had incredible traction. So this last 10 months, we've had over 1 million users, over 190 million shared on our platform, and we're in over 130 countries. So right now, we're at around 12,000 shares a day. And what does that mean, right? That means that in one day, 12,000 people have created a card on our platform, or to put another way, 4 million users a year. 4 million, cards a year. That is the amount that Revolut put on their platform in 2019. So to me, that's incredible, right? And I say that, of course, because it's my company, but why is that happening? It's happening because we're actually replicating human behavior. So if you think about it, because we're a platform, and 2/3 of the world actually spends someone else's money, and 70% of all borrowing actually happens within families or friends. And what we're doing on our platform is we're essentially replicating that behavior and allowing users to create and distribute their financial products within their tribes.
Thank you. What about you, Ola, from an SME point of view?
Yeah, sure. I think one of the hardest things about fintech that no one really tells you about is how hard it is to help adopters climb what we call the trust curve. So if you're a new fintech platform, no one's heard of you, and then you expect people to join and start, sending money or using your platform. Financial services is a trusted, trust-based industry. So for us in the early days, it was very, very hard to really get early adopters to be comfortable with, quite frankly, entrusting us with their money. Some of that we solved for because we were lucky enough that the early adopters were mostly referral based. So once you have a great product, businesses refer other businesses to start using you. Once, people see that the product has worked, then you create a decent network effect. The other thing that we had to do was to get up the regulatory curve as quickly as possible. So we spent a lot of time, working on our regulatory license because we just felt that, it was such an important piece that we needed to get out the door to ensure that, businesses feel comfortable using us. So, one of the things that really makes fintech hard is the regulatory aspect and getting, businesses or individuals or consumers to trust you. But once they do and they start using and your solution works, it becomes a very, very strong moat because, they tend to be very sticky and that's sort of like what's worked well for us.
Thank you. Yehia? About also customer adoption of crypto, how hard was it to educate them? And yeah.
Sure. So when we started starting here in the region, there were communities in different countries in the region, but there were no trusted ways to have access to crypto. And if there were high fees. There were a lot of, just bad actors in the space. So the industry had suffered quite a bit from a reputational perspective, which didn't help the conversation with the regulators and other industry players. When we came in, we understood that trust is the foundation of the industry, and we could have started this company in several different ways, but we chose the toughest one, which is the regulated route. And working with regulators to explain something like crypto, especially earlier on, as early as 2015, 2016, there were some challenges. How do you, describe this new technology in the traditional world, in the traditional sense that they're used to regulating and understanding? So that was one challenge. The other was, how do you build trust in a market where people have suffered quite a bit and working with an intangible asset that you can't really touch or feel. So the education of the security and the trust was very important for us. And then working on community efforts, educating people on what this is, without really pushing any specific investment thesis. Just talking about the benefits of this new ecosystem is how we chose to tackle it.
Nadine?
Yehia and Dola mentioned trust, and I think that's a very, very key component. Especially, it's a main characteristic of the segment that we have as a core, which is the millennials. Another thing is authenticity. What we know about our market is that they look for an authentic experience, and that's something we've focused on. So we have a lot of education. We do a lot of blogs, a lot of articles, a lot of social engagement. We put a lot of information out there because the reality is they also look to be empowered. And this is something we wanted to actually highlight as Sarwa, is how can we empower them to make their investment decision. They also want to be part of the community, as you mentioned. So there are communities and segments that we actually tapped into to build that trust, but also to make our clients and our database feel like they're part of something bigger. That's something that has really helped us to grow, and we're looking, to establish the leading consumer finance app. And these are two main elements that we're focusing on.
And how about the regulators, especially in the GCC? How was dealing with them? Any special regulations you would like to adopt? Do you think it could be a game changer?
It's been, I would say, an open conversation. When we launched Sarwa, it was a lot of regular meetings. We sit together. We actually, we were doing weekly meetings, and then bi-weekly meetings, taking them through the process that we have, making sure that they feel the ability for us to basically KYC our clients, data safety. So there was a lot of milestones we had to hit, but there was really willingness to listen and to work hand in hand.
And Padmini, how was your relationship with regulators, especially that your product is new to the market?
So regulators are going to be regulating companies that are already in the market and you know, they're building certain innovations or exploiting customers, right? And so they're not looking at our company just yet, but when they do, we are keen to engage with them, and we're keen to sort of help turbocharge this platform into, you know, what it will be, the innovation it will be. I wanted to, though, bring up something really important, which is, where is this all going, right? So the future of finance, essentially, is allowing people to create and distribute their own financial products. And in so doing, that will change where finance products are currently held. So they've long been held in the hands of banks and fintechs. And just like Airbnb allowed people to create hospitality products, and Uber allowed people to become a taxi service, finance is actually going in that direction as well, right? Allowing individuals to create and distribute products that they are capable of within their communities. And so as the movement goes there, that is what regulators will continue to look at. Right now, they're actually looking at BNPL, and they're looking at other current market innovations.
Thank you. Yehia, a lot of people think about crypto as a speculation. What was your thesis behind launching a crypto exchange?
So this starts with the fundamental belief that this is something that is going to change how we deal with each other, how we handle value and trust online. Personally, I was exposed to crypto in 2012, and it's when you work in a traditional banking or financial service industry, you understand some of the fundamentals of how the industries work and some of the shortcomings of those industries. So then came, first obviously Bitcoin and how it came about and the underlying technology. So that was very compelling for us. We understood that there are several use cases. This is a long-term industry, and that was something that we still say today. And the industry has been through several evolutions. And so when it first started out, it was very focused on people that were in the tech space or people that were in cryptography, or just very focused on people that are in technology in general. Then you had another phase where regulators were trying to understand what this is. There were mass, let's say, dissemination of information around how it's being abused. And then following that, you had the Ico Craze of 2017, where people were exploring the parameters on how to use this technology. Then globally, you start seeing regulations come in place and really set the tone for how to work with this industry. There are several use cases, and I'm not really going to get into the investment thesis because that's not something that we really do. But there are, very tangible use cases today that people are using this technology for. And we're seeing that in terms of the types of clients that we have and how they're utilizing this technology. So it was only a matter of time that this would work in a region like ours, where actually, the banking infrastructure, excuse me, the banking, can I get some water, please? Okay, sorry about that. Been on a few panels this week. So the banking infrastructure was really, suffering, and Ola mentioned something about devaluation, which is another thing. Remittances, you have a large expat community in the region. There were several ideas at the time that made sense for the region here.
Thank you. Ola, from an SME perspective, where do you see the status of digital currency? Are you feeling that SMEs are adopting this technology? Would they like to be? So where is it from your point of view?
Yeah, sure. So from our sort of vantage point, I don't think there's a very strong adoption yet by SMEs for digital currencies. There's a lot, obviously, in the consumer and retail and individual space. You know, everyone's adopted a lot of these quite well, mostly for, you know, sometimes just speculation or assets increase in value reasons. But there are very strong use cases for digital currencies in the SME space. Like Yehia mentioned, there's a clear sort of remittance use case for stable coins, for example, where when you're bridging one sort of illiquid currency to another, you know, you're better off doing it via a stable coin, which is, you know, pegged to a fiat and is probably much more liquid, and it's also digital. I do think that there's an education aspect of this where, companies such as ourselves fairly should be doing a good job of educating SMEs on the potential of this sort of innovative technology. So the adoption is quite low at the moment, but I think once a lot of these SMEs start getting educated about the benefits and the innovative features of digital currencies, then, you know, you'd see a lot of adoption. But some of that has to be driven by, you know, fintech players such as ourselves. You know, right now, you know, a few weeks ago, some of my colleagues put out a research paper on the Nigerian e-naira, for example, which we think is a very good move by the central bank. And as soon as people get more educated, I do think that, you know, digital currencies will be adopted at scale by SMEs, because they are very, very good use cases for why they should be using
even in
currencies.
Nigeria, knowing that it's like the second biggest market globally in terms of Bitcoin adoption.
What was the question?
Even in Nigeria,
Yeah.
because Nigeria is like the second biggest market worldwide, do you feel there is more awareness about cryptocurrency in Nigeria specifically, or?
Absolutely, lots of awareness, but really still on the individual level rather than on the SME space. So obviously most SMEs have owners that are individuals. So the more those owners start adopting crypto individually, the easier it will be for them to actually switch to business use cases for it.
Nadine, Sarwa launched also a crypto product. Can you tell us a bit more about it and also the thesis behind this?
Sarwa started with a core product, which is Sarwa Invest. And Sarwa Invest is our hands-off investing service. So you have diversified portfolios, globally diversified, where it mimics the risk level and risk appetite of the client. Now, as the market is transforming, Jad, and as you know, we listen continuously to the market, we're really continuously adding new products, one of which is Sarwa Crypto. And basically, it's the same portfolios that are globally diversified, but you also have exposure to Bitcoin. So there's a 5% exposure to Bitcoin. And the reason why we decided to launch these portfolios is, again, there is demand. We've seen a lot of our clients asking for some exposure. They still want to be really well diversified and make sure that they're building wealth long-term the right way. But at the same time, they wanted to actually, you know, have exposure into an asset that they believe is there to stay in the long term. So we decided to go for that. We're also continuously transforming because we just launched also Sarwa Trade, which is a zero commission trading platform, as you mentioned.
Thank you. Padmini, is Xer looking to include digital currencies in the near future? Where do you see its future within your own market?
So I definitely see that the need for a decentralized platform. In fact, what we're doing is DeFi, in fact, right? So, but instead of using crypto, we're using fiat, because most transactions and most financial instruments are actually in fiat. And so when crypto becomes more prevalent and more financial instruments are developed from there, then we'll add crypto on. To sort of give you the figure I gave you before, because they're so prevalent, we are able to do 12,000 cards a day, right? And because we can do 12,000 cards a day, we can actually essentially do 4 million a year, which is a huge amount of growth, but a huge amount of growth because we're using existing financial instruments to develop that. When crypto also has those sorts of instruments, then we can actually build further.
Ola, what can alternative SME banks provide to SMEs using technology?
Sure, good question. I think quite a lot. I think mostly using data as an anchor. Digital technology players have so much to offer to SMEs as opposed to traditional financial institutions. If you take sort of something like credit, for example, what it would take for a traditional financial institution to underscore and underwrite credit to an SME is a very sort of long-winded process right now. Probably has some credit committee, some loan approval process and all of that stuff. They need a lot of data on the business. Whereas from a technology perspective, you can actually do cash-based lending or revenue-based financing just based on your ability to pass through the data that the business is generating. So if I can analyze, for example, the last 2-3 months, bank flow statements of a business, I can make a decision as a digital lender on whether I want to advance, a 1-week credit line to that business. Whereas a traditional institution might take 2 to 3 months to decide, and they need some collateral and most of that. So I think on the credit side, there's quite a lot that can be done from a digital perspective. Also on things like trade finance, supply chain financing as well. There's quite a lot, and in our space as well, in terms of payments, the ability to effectively shorten the time span it takes for a business to send money to another, using sort of technology as your rails as opposed to antiquated systems such as Swift, is also quite strong, and it's something that I think the future is really, really strong for technology players when it comes to SME banking, because the old guys they just can't keep up. There's too much going on.
Thank you, Nadine. The wealth management market is being disrupted. There are several players emerging, also the global ones like Robinhood, etc. Usually they are segmented into focus on active trading or those who are focused on passive trading. And you're one of the few who merged both together. Do you see as one of these products cannibalizing the other, or what was your thesis on launching both?
I think they're actually complementing each other. Again, the reality of, let's say, the UAE market, you have around 45% that are millennials, followed by Gen Z. If you look into the world average, it's around 27%. So that speaks to the segment that we have here. And again, sort of applies across the region. We have a very young population that's looking to build wealth. So for us, it was, again, we stand by the fact that we believe long-term investing is the way to go if you want to build wealth for the majority of retail clients. But also we wanted to give them that ability to choose and to invest and trade into themes, companies they believe in. And again, as I mentioned, it's always about listening to the market and what the market needs. Now, when we launched Sarwa Trade, we saw a very quick adoption and an increase in our client base, which speaks to what they're looking to have. We still have a lot that go into invest, but we also have an uptake in trading in terms of clients.
Yehia, in terms of scale, you grew more than 10 times year on year. What were the challenges to keep up with this growth that you faced? And also, your team grew massively. And yeah.
Sure. So just to save time, because I know we're almost up on time here. Just like any other company that's growing fast, last year we had, in October of last year, we had 70 team members. Today we're over 330. So to grow that number and to maintain the ethos of the company, the culture, which as the team grows, you start to learn how more important it is to maintain that. And then there are challenges around geographical expansion. So when we expanded in Turkey, for example, that was another challenge. Given the cultural differences, the market differences, there are 41 crypto companies operating in Turkey. So figuring out your niche and being able to serve the market there. And then another layer is the regulatory layer, where each country has its own regulations, its own mindset, its own motivations for regulating crypto, whether it's increasing tax revenue, security, and traditional, AML, CTF, anti-money laundering, counter-financing of terrorism, regulations, or even being a fintech hub of the region. So each country has its own motivations why they want or don't want to regulate the industry. And then how do you maintain your product advantage and operational expertise within the different markets, handling different currencies, settlement, working with banks, intermediary banks. So yeah, that's like a sneak peek.
Thank you. Ola, same question related to scale, also to keep up on your growth. And also if you can elaborate more on how hard is it to recruit the right talent, especially in your sector?
How hard is it to
recruit the right talent, especially in your sector? Yeah.
Yeah, great question. So I think literally what Yehia said is really what most scale-ups face. When you start growing your team from a certain amount to another, super hard to keep the culture. This time last year there was just 9 of us. Now we're 46. So it's I used to spend time with everyone, but now I don't have the time, and it's hard to make sure that everyone is rowing in the same direction. So that's one of the things you face when you're scaling up, and also just recruiting the right type of talent. I think one of the downsides of the amount of capital going into fintech right now is there's just too much money chasing too few talent, right? So it's so hard to recruit very, very good people because, if you're well-funded, there's another, better funded competitor out there willing to give that talent, the compensation they want. So, we've tried to be quite sort of innovative with the way we go about that. We're also selling a lot about the culture and the mission as well. We think it's a much bigger opportunity for, someone that is talented to join Verto as opposed to, be at Revolut or something. So there's quite a lot of ways to go about, getting people to be excited. But, the growing pains are very real. But that's one of the things that makes the startup journey exciting.
Thank you. Padmini, you covered 130 countries from day one. What does it take to build a global fintech play?
What does it take? So actually, there's the basics, right? You've got to have a global product, global use case, global need in order for the product to be actually globally used. And you can't buy that, right? No amount of marketing dollars is going to buy you that. So one of the reasons that we grew is because sitting in the UAE, we're actually able to have customers from here share money back home. And that network effect has helped us. In fact, we've actually only spent marketing dollars in India, UAE, and Bangladesh, 3 countries. But in over 32 countries, we have over $100,000 shared each, and in over 12 countries, over $1 million shared each, right? So that sort of network effect is what the product brings with it. It also brings challenges, but that sort of network effect brings its globality. The second part of it is, actually, I'm going to leave it at the first part.
Okay, thank you very much. We're done for the panel. It was very exciting to be there. Thank you.
Thank you,
Thank
Jack.
you.
Thanks, Jen.